So welcome to today's presentation. My name is Peter, your senior market analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. Let me position a little bit the chart. It's characteristic how the US dollar continued its drop. Mind you that all charts to be presented today are to be of the same time frame, the 4-hour time frame, unless otherwise stated. The slowdown of the US CPI rates practically enhance the market sentiment that the Fed is nearing the end of its rate hiking cycle. Even should the Fed proceed with another rate hike in its next meeting in 2 weeks' time, the market expects that more or less there will be no other rate hike, at least until at the end of the year, while it even prices in a rate cut in the first quarter of the next year. So practically, the dovish expectations of the market for the Fed have been enhanced. Okay, or let me rephrase that. The hawkish expectations for the Fed had eased considerably in the market, which caused the US dollar to weaken. Now, for the first, we're going to have to change the 100.60 support line into a resistance line, given that the price action has broken clearly below it. Let's go hunting for a new ultimate support level. Okay. There is support somewhere here. And you can see it, we have one throw, a second, and a third throw in a row. While the level also provides resistance here and here. So that's a pretty valid level, and I would be keeping it as the ultimate support line for now. In green, that would be the 97.75. Let's lock this in. And let's reposition, correct, and reposition also the labels. Starting with the R3, which is now being placed at 102.55. The R2 at 101.60. The R1 at 100.60. The S1 at 99.80. The S2 at 98.80. And the S3 at 97.75. That's it. Now let's lock everything in. For the time being, we tend to maintain our bearish outlook for the index. Definitely the downward trend line is guiding us towards that consideration. I would be also highlighting though the RSI indicator, which has dropped clearly below the reading of 30. It's currently pretty low, very low. It's at 15, which highlights exactly the bearish sentiment on behalf of the market for the index. On the other hand, though, I have to highlight here the risk of the index having reached oversold levels, and that would make it ripe for a correction higher. But as long as the downward trend line remains intact, we tend to maintain our bearish outlook. And for the time being, I wouldn't be surprised to see the US dollar index dropping, breaking the S1 99.80, start aiming for the S2 98.80. In my opinion, we may say that The weakening of the US dollar since the end of last week was a result of practically, or mainly if you prefer, financial releases. We saw the release of the US employment report for June starting to weaken the US dollar on Friday. That was further enhanced yesterday. Mind you that in the meantime, on Monday, we had some comments by Fed policymakers which tended to highlight the possibility that the Fed may be nearing the end of its rate hiking cycle after 2 rate hikes more. And I would say that also enhanced the USD bears. So I would be placing additional emphasis on US financial releases over the coming week, especially given that, if I'm correct, US Fed policymakers will be banned from making any comments, given that the Fed's next meeting is in 2 weeks' time and there is a 14-day moratorium for statements. So practically, we may see the bearish sentiment for the USD being maintained to some degree or another. Let's have a look at Euro USD. We should be seeing a reverse picture, and here it is. Definitely the upward trend line is being maintained. We have to switch the 1.1090 resistance line into support, given that the price action has broken above it. Let's go hunting for a new ultimate resistance line. Going way, way back. So we see a level here, given that we had resistance here and support here, even more support here. So that seems to be pretty valid. Let's lock this in red, please, being the 1.3940. No, 1.1395. Readjusting the chart. Let's reposition the labels. Starting with the S3 at 1.0945. The S2 at 1.1010. The S1 at 1.1090. The R1 at 1.1185. The R2 at 1.1275. And the R3 at 1.1395. Locking everything in. So we tend to maintain a bullish outlook for the pair. Once again, only in the reverse, we see that practically the upward motion has forced the RSI indicator to reach above the reading of 70. Once again, showcasing the bullish sentiment of the market for the pair. On the other hand, though, maybe implying that it has reached an overbought level and maybe ripe for correction lower. But as long as the upward trend line remains intact, we tend to maintain a bullish outlook. For the time being, I wouldn't be surprised to see the price action of Euro USD actually being able to break above the R1 1.1185 and start aiming for the R2 1.575. On the other hand, should the pair stabilize, I would expect it to remain between the R1 1.1185 and the S1 1.1090. For a bearish outlook, I would require at least the price action to drop, break the pre-mentioned upward trend line. That would be an initial indication that practically the upward movement has been interrupted. But I would also require for bearish outlook the price action to break the S1 1.1090 and aim, if not even reach, the 1.1010. That would allow us to actually be able to draw a downward trend line, showing us the limitations of a possible downward motion, nothing less. Let's have a look at GBP USD. Whoa, that's intense. Okay, that's clear upward movement here. Even more intense than the euro, in my opinion. It's characteristic that the price action was able to break through the 1.2850 and the 1.2940. Sorry, the 1.3040. Let's go hunting for new resistance lines. I'm placing the first resistance line here and the next one up here. They're pretty narrow, but I think they're quite valid. Especially the R3, which note how it has provided also some support here and here. Okay, let's readjust the chart. Let's correct the levels as well. Definitely this has to be changed into red. Starting with the S3, which is now being placed at 1.2850. The S2 at 1.2940. The R1 at 1.3040. That's the S1. The R1 at 1.3145. The R2 at 1.3225. The R3 at 1.3295. Locking everything in. Okay, let's discuss a little bit about the fundamentals of cable. Definitely the pair's rise was supercharged by the slowing of the USD pair rates, but on the fundamental side, the pound has also some elements which tend to provide support. And I would be noting here the release of the Financial Stability Review of BOE yesterday, which tended to show that UK banks seem to be well capitalized to face a potential economic crisis. Now, such a report would allow practically BOE to maintain a very aggressive hawkish stance without the fear of the banking sector collapsing. So practically, that gives BOE a free hand to continue hiking rates, at least from the banking sector onwards. So we tend to maintain the hawkishness of BOE. On the other hand, though, we had some financial releases today which tended to be a little bit worrying. And I would be noting here for June the GDP growth rate, which dropped into the negatives. The same applies also for the manufacturing output growth rate, which contracted as well. So that may more or less be a warning sign that a possible recession is nearing the UK economy. For the time being, though, on a technical level, we tend to maintain the view that the upward momentum for GBP/USD is being maintained. I would expect the pair to continue higher, aiming for the 1.3145, and that's practically due to two elements of the chart. The first would be the clear upward trend line guiding it. The second would be the RSI indicator, which is above the reading of 70, as the euro as well. And once again, that may be highlighting the bullish tendencies in the market. On the other hand, though, may also be a warning that the pair may have reached overbought levels and may be ripe for a correction lower. Let's have a look at USD/JPY. That's nice. USD/JPY hitting a floor practically on the S138.45. Allow me to readjust everything before we move on. It's interesting how the pair has found considerable support, and actually I'm quite happy that we were able to predict that level. Now this is interesting. On the one hand, we have a downward motion which seems about to be interrupted, and that's being, I wouldn't say evident, but that idea is being supported by two elements. The first element is that the price action seems to have hit the floor at the 138.45 support line, and it's characteristic that the downward trend line guiding the pair seems to have been broken. That tends to suggest a switching of the outlook from a bearish outlook in favor of a stabilization of the pair around the S138.45. On the other hand, we have the RSI indicator, which remains below the reading of 30, yet edges higher. So the big question here is the following. Is this a stabilization of the pair, or is this a mere correction higher? If it's a correction higher, then we should expect that the price action may continue lower over the coming days. If it's a stabilization though, then we may see the price action remaining near the S138.45. For the bearish outlook, I would expect the price action to break clearly the S138.45 and aim, if not even breach, the S237.45. Mind you that we're talking about a wide drop of USD/JPY, which started on the 6th of the month. That's about a week ago. And we're counting about 650 pips or so, delivered in 5 days' time. It's as if the pair was dropping 120 pips on average per day. It's huge. For the time being, we tend to maintain our bearish outlook, but once again, I'm highlighting the possibility of a stabilization of the pair here. Okay, let's move now to USD/CHF. USD/CHF, which intensified its downward motion from yesterday, Note how the pair was able to break through the S1 0.8755 and then break consecutively also the 0.8680. Let's go hunting for new support levels. 1, 2, and let's unlock the chart, go hunting. We will have to go back to 2015 on this, so bear with me. There hasn't been such levels since that area. There you go. Could be wider. Here. Unlocking the chart. Readjusting everything back to the 4-hour chart. Definitely these have to be reversed into resistance lines. Sorry. In green, the new support lines have to be colored. The 0.520. 0.430 in green as well. That's it. Okay, locking everything in. Let's correct the labels. Starting with the R3, which is now being placed at 0.8820. The R2 at 0.8755. The R1 at 0.8680. And then we have the S1, which is being placed at 0.8590. The S2 at 0.8520. And the S3 at 0.8425. Let me correct that, verify that. 8430. Yep, that's it. So for the time being, we tend to maintain our bearish outlook for the pair. The picture is more or less the same as in most other charts here. Weakening of the USD, in this case allowing USD CHF to drop. A downward trend line which tended to intensify over the past few days, which guides the pair lower. I would be noting that the RSI indicator is below the reading of 30, quite low. It's actually at 15 as well, if I'm correct. Even lower, it's at 13. So more or less, we tend to maintain the view for a bearish outlook for the pair, which will most probably lead it to break the S1 0.8590 and start aiming for the S2 0.8520. For a bullish outlook, so you're asking, no, for the timing we do not see a bullish outlook, but a bullish outlook would require practically the pair to rise, break the downward trend line pre-mentioned, also break the R1 0.8680, and start aiming, if not even reaching, the 0.8755 resistance level, nothing less. That should sum it up from all of us here at IronFX. Best wishes for solid trading.
Hello everybody and welcome to another one of our great videos. Today we'll be looking at how to practice discipline in trading. Discipline is a necessary and important part of any trading strategy. Without discipline, a solid trading system and proper risk management lose their value. Self-discipline involves developing a mental framework which enables you to stay motivated and focused. You should have a target or goal in the mind, as this is the first step towards developing self-discipline. Discipline can be mastered and all you need is willpower. This involves carefully studying the markets and especially the markets you're trading. In order to acquire discipline, you must practice patience and be able to control common emotional impulses like fear and greed. Proper discipline involves having and sticking to a trading plan. Create a schedule for your trading. Know what signals will make you enter or exit a trade. You create trading rules to get you out of trouble when positions go badly. If you don't follow the rules, you've lost your discipline and allowing for even greater losses. Ensure that you apply proper risk management by sticking to your stop loss and take profit orders. If you stick to the rules, you will discover that discipline is necessary for success. Thank you for watching.
Hi, good evening. Let me just check the chat settings. Let me share my screen. All right, so hi guys. Just want to check if you guys can see my screen. If you can type it in the chat box that you are able to see. Are you guys able to hear me and see the screen? I will need someone to respond before I can start sharing today's webinar. See someone raised your hand. If you have any questions, do type it in the chat box. It's a bit hard for us to catch that function. Okay, I'm assuming the screen is actually sharing fine. You guys can hear me perfectly. Okay, so a little self-introduction. We are bringing you the webinar from the Everest Fortune Group, and we are also the best finalists for Best FX Research for 2019, 2020, 2021, and also Best Equity Research in 2020 and 2021. Okay, so today's agenda will be on risk management and on leverage. So it's a pretty lengthy chapter, this webinar. If we have any extra time left, I'll be doing some live analysis for you guys, and then we can better see today's chapter on risk management, and also what does risk and reward ratio actually really mean. So what is risk management? So risk management is basically a set of rules that governs the trader's actions to protect against the downside of the trade. So many of you might know there's something called stop loss, and as well as a stop loss margin that we are looking at. And then on the second point, since every trader will experience a loss or a series of losses at some point, proper risk management is actually essential for long-term trading success. Okay. So risk is the opposite to reward. I mean, that's very simple. Okay, I will need everyone to actually mute and close off your videos. Okay, if you have any questions, you guys can actually type it in the chat box. All right. Okay, so at which point will your analysis be considered incorrect? So this is where we consider when do we, or what price, at what point that we put in our stop loss, and how much would you lose at that point of time? Have you guys calculated what kind of percentage of a risk reward ratio you guys are putting yourself into once you enter upon your analysis, and the appropriate size for your trade? Tools for effective risk management. Okay, there's 3 types of rules that traders can follow through. One of which will be leverage and margin. Second will be stop loss and take profit. And lastly will be risk to reward ratios, which is the one that I have been talking about. Okay, so first up, we can talk about leverage. So just want to know by a show of hands or a type of yes in the chat box, how many of you actually leverages through and actually knows well enough about the concept of leveraging? Okay, I'm assuming everyone's still pretty new on the concept on leveraging. So let's take a look. So basically, leverage is the ability to control a large amount of money using a very little amount of your own. All right, enter in a position that is more valuable than the amount of money you have in your account. Sounds like a pretty good concept, but it's also a very hard concept to actually grab, right? So leverage is a double-edged sword. So for example, right now you are looking at a capital amount of $10,000. Let's look at the first leverage ratio of 1:20. So you're able to control a position of 200,000, which that will allow you to have a maximum trade size of 2 standard lots. And every 10 pip move, you'll profit in $200 in your capital. Looking at the second leverage ratio, we are looking at 1:100. So you're able to control the position of 1 million, all right, with a capital amount of $10,000, which allows you to have a maximum trade size of about 10 standard lots. So with every 10 pip movement, you'll get $1,000 back in profit. And then lastly, we are looking into a 1:500 ratio, looking at a 5 million controlling of a position, and that gives you to the amount of 50 standard lots, looking at a $5,000 reward at every 10 pip movement in your direction of your analysis. However, we are now going to look at the losses that could incur from the leverage movement. So back to the first kind of leverage ratio at 1:20, we are looking at 2 standard lots. With every 10 pip, your losses will go to $200. So basically, it is the same as the amount of money they will gain if it works out according to analysis. And then we are looking at the losses as well. So for example, you take the last ratio, the last leverage ratio, 1:500, giving you a controlling of a position of 5 million. 50 standard lots. So every 10 pip will cost you to lose $5,000, right? So that will actually take an impact on your capital amount, just by that's as equal as 50%. So leveraging might sound great if you are all winning or profiting and your analysis just so happen to work out fine. However, if you are losing, you could lose your account to a margin call really, really fast. So let's look at margin right now. So margin is the amount of money that trader need to put forward to open a trade, and then margin level equals to equity divided by use margin times 100 for percentage. So for example, we can take a look right here. If you're using the ratio of 1:100 leverage ratio, use a margin percentage of 0.01 equals to 1%. So buying 100,000 euros with the current price of 1.04 USD with a 1% margin, your required margin would be at 1.4K. Margin level equals to 10,000 divided by 1.4K times 100, that will be 714%. So I did mention about margin call just now when we were talking about the losing of a profit. So you can see that margin call level is when the margin falls to 100% and unable to open for any more trades. And margin call equity falls below 100% of the margin required. You will have to deposit more cash to sustain the position. If not, the position will automatically close out. So let's just say talking about stop out. So free margin falls below 50% of the margin required, positions will close out automatically. So how much risk should we actually allocate to a trade that we deem worthy or we want to look at? So before I move on with this topic, is there any questions on the content that I've shared before this slide? Okay, so I guess we're all good. Let's look at risk allocation. So risk allocation actually basically means risk per trade should always be smaller percentage of your total capital. So for example, you are putting 2,000 out of your 500,000 kind of trade. So you're looking at a very small percentage of your total capital. So typically the maximum loss should be allowable no more than 2%, right? 2% is a good gauge. I mean, there are many different kind of risk takers, right? We have the very, very safe kind. We have adverse risk takers. So we are looking at normally when we advise, not advise, I mean, when we are sharing this kind of risk allocation content, we will normally tell our attendees that maximum loss shouldn't be allowable more than 2%. All right, that also depends on your experience level and trading style. So in comparison to a $10,000 account, we are looking at one trade for $200 that will equals to 2% risk and 5% risk at 500. So we are looking at a series of numbers of trades. We have 2, 3, 4, 5. So if let's just say if you are putting your account at maximum of a 2% risk and you take 5 trades, and that will amount to $961 out of your $10,000 account, coming up to about 10% of your account. And then if you are taking a 5% risk per trade, then we will be looking at $2,262 after all these 5 trades technically have lost, or we are risking the amount at a 23% mark. So what is the ideal percentage per trade? All right. So I mean, it would be great if you guys can pitch in and tell me how many percent do you guys actually normally risk per trade? Or you guys can look at these numbers on these slides and give a gauge. We are looking at 1 to 3%, 5%, and 10%. So what is your ideal risk appetite? Okay, so I have most common answers at 1 to 3%. I think 1 to 3% should be relatively safe, but so what is the ideal one that we are looking at? So for example, you have $1,000 and we are looking at a roulette here. Bet on the black to win, there's about 48% chance to win. So how much would you bet? It's a very simple math gambling question, right? So let's just say we are betting on black and you have 48% chance to win. How much would you bet it? Basically, the more you bet on it, the more you would lose. It's a simple math. So even though the percentage of winning is at 48%, which is pretty high for out of 100%, however, the more you bet, the higher chance and the higher risk you are taking in terms of this roulette, for example. And then let's just say, in this case, sorry, I think there's a typo on the slide. So in this case, if you are betting on red, so how much would you bet? So you see, it is the same concept, however, with a lower probability of winning. However, the amount of money you're putting in will increase the risk because of the lower probability. So how many pips should your stop loss and take profit be? So I know that this can be super subjective. Certain people look at the pips, certain people look at the horizontal support and resistance level. All right, so we are looking at how many pips per se. So I mean, if you guys have exact how many pips you guys actually follow through while you are trading, you guys can type it in the chat box below. However, I feel that there are many other ways to look at it, not just pips. So if we have time for the live analysis later on, we will look at how the other ways of putting in your take profit and stop loss. So we also have to understand risk. So understanding risk and what is your ideal lot size. We have 0.1, 0.3, and 1. So how does lot size affect your stop loss? How does lot size affect your stop loss? So we are looking at the graph here. Account size at 50,000 USD. Currency pair looking at Kiwi dollar. 1% of the account at 500, 2% of the account at 1,000, and 3% of the account at 1.5K. So we are looking at a stop loss of 50 pips, and we are looking at a take profit of 90 pips. Okay, so in this case, the lot size do affect your stop loss. For example, you are looking at putting a stop loss at 50 pips away. However, your lot size is in a huge amount, a huge lot size. For example, you are looking at 1 standard lot, right? If you are losing all the way at 50 pips, that will allow you to might get into margin call. All right, so lot size do affect your stop loss. All right, however, if you guys are more keen on looking at pips instead of a how do I put it? Capital margin level. So do calculate against your lot size. So for example, if you're looking at 50 pips stop loss, use that to backwards calculate to your account and what is the appropriate lot size for you to enter for this trade. So we can also take a look at the pips, right? So let's look at 50 and 90 pips. In this case, you will see that, 50 against 90 pips looks like a very big risk and reward, right? So let's look at the next slide. We're looking at 20 and 36 pips. Yes, it looks like lesser pips, looks like a lesser, more safe kind of trade. However, they are the same. All right, they are the same if your lot size is the same. It's because the risk to reward ratio is the same, right? So if your lot size is according to pips, then this will be safer. However, if you are comparing risk to reward ratio in terms of percentage, they are the same. All right, so this is one tricky thing that sometimes people are not reacting to the number of lot size. Sometimes people are not considering the risk to reward ratio when they're entering the lot size, as well as looking at an effective stop loss. Yeah, so you can see that there's two taglines here. It's not about the number of pips you make, it's about the risk to reward of your trade. So look at the ratio. I think risk to reward ratio is really very important in this case. So for those that are wondering how we got the pips, you can look at the entry price on the left, on the right, okay? So stop loss and take profit placement. So where is the appropriate place, appropriate price that you guys technically should look at during your analysis? All right, so first point would be, rather than considering stop loss and take profit levels as fixed pips amount, stop loss and take profit levels should be placed on technical levels on the charts, right? Some traders are super fixated on the idea of, I will only put my stop loss at, for example, 15 pips, 20 pips, and I will not take it beyond that. But how sometimes putting stop loss according to pips might affect your analysis in terms of you're not allowing your analysis to have breathing space, you're not allowing the market to correct to your analysis, you're not allowing the market or the price to actually move as per what you're looking at. Okay, so instead of looking at a pip level or pip amounts, stop loss and take profit should be placed on technical levels on the charts, which is also our important horizontal levels like your support and resistance and historical price values. All right, so one of the example will be shown in this chart below. So stop loss beyond and take profit before. So normally stop loss will give it beyond the resistance or slightly above the resistance or the support, depending on the direction you guys are looking at. And take profit will normally try to put it slightly before what we are looking at, slightly before the resistance that we are aiming to target to, and slightly before the support we are aiming to target to, which actually allows our analysis to be able to follow through and take profit and stop loss when it is absolutely necessary. All right, so one of the example is shown here. In this case, they are looking at a sell, right, from the major resistance area on the yellow line. So you can see that by right, resistance should be at the tip of this hold on, so normally it should be at the tip, right? However, we are putting it slightly above, so we can see the red lines, stop loss, slightly above, just slightly above the resistance level. And then we are looking at below at the major support area instead of resistance. Sorry, that's a typo. Major support area. We are looking at a support of the yellow golden color line, and then we can see that the take profit we did indeed put slightly above the major support area. Okay, that's one way to look at when you are putting stop loss and take profit. I mean, it's a very good guideline if you want to put it right on the resistance area, it is doable as well, or right on the support area, it is doable as well, depending on the situation of the analysis. So what is a healthy risk to reward ratio to have? Risk to reward ratio helps investors manage their risk of losing money from a series of bad trades. It is essential for traders to identify positive risk to reward. Typically, it's suggested to have 1 part of risk and 2 part of rewards. So 1:2 ratio. All right, very simple, just 1:2. Preferably, if you can keep the risk down for a 2 part of reward, it would be great as well. But theoretically, 1:2 is a good ratio amount we are looking at. Yep, so here comes the hurdle. So a fixed risk to reward ratio could also pose as a difficulty for most traders. Something to consider in addition to risk and reward is the winning rate. So let's look at risk to reward ratio versus the winning percentage. So trading strategies win rate, let's look at 80%. So your risk to reward ratio will come down to 1:0.25. Meaning we are looking at sorry, it should be reward to risk, okay? So in this case, the chart is being plotted against reward to risk. So let's just say your winning strategy is at 80%. You are rewarding yourself at 1 part with 0.25% of the risk, and then so on and so forth, all the way to 20%. So let's just say your strategy win rate is very low at 20%. So you're actually exposing yourself to 4 parts of risk when you're only earning 1 part of the ratio or reward. All right. Oh, thank you, Juha, for telling me. Okay, so apparently the chat box is not working fine for everybody. If you guys have questions, you can put it in the Q&A box as well, I guess. Yeah. Okay, so let's move on. Okay, that comes to the end of this chapter on risk and reward ratios and leveraging. So we do have some time left, and I think it would be great if I share some live analysis, and it would be great if you guys wanted to pitch in to look at some pairs and we can analyze together. Okay, hold on, let me stop my screen. Let me just switch over. to the trading view. I think I need everyone to mute the mic. Hold on. All right, hold on. Let me just share my screen real quick. We are unable to give WhatsApp line. If you guys have any more extra questions, I will show you a platform later on where you guys can access and ask questions. All right. So let's just hold that till the end. And let me share my screen right now. Okay. It'll be great if you guys can let me know that you can see the chart. Okay, I believe it should be sharing fine. Okay. Thank you. Okay, let's look at what we can see on dollar yen. We'll look at the weekly chart. Pretty good upward movement for a while. Looking at a potential further downfall. Okay, let's look at the daily chart. On the daily chart, I can pretty clearly see a ascending channel prior to the downfall. You can see that actually price has already broke out the channel. We are looking at a potential drop from here. Right now we are looking at a resistance, support turn resistance at price 142.078. Okay, on the daily chart, let's look at a 4-hour chart. I would say that on a 4-hour chart, the trend itself is not quite as clear. However, we are looking more of a ranging situation at support at 138.51. Let me just change this. Okay, and we have resistance at 142.078. So previously, price indeed dropped and did a little bit of a pullback, and we can look at a common V shape that we are looking at. I would say the overall day and weekly chart, we are looking at a downward fall. I would much rather analyze this to be a downward fall, looking at this and placing a nearer take profit. and putting a slightly above, just touching this, looking at a slightly above straight stop loss. This is how I am viewing it. We are looking at a potential sell. Let's take out the Fibonacci retracement. Closer to a 50% Fibonacci retracement for our take profit. And then let's do a smaller one actually. Yeah, looking at the sell entry at 50% Fibonacci retracement as well. Let's take out our we are also looking at a, sorry, this is wrong. Let me just take the 1.8% of stop loss. We can use this range, so we are looking at a bigger range for stop loss. We can also take a look at our and let's take a look at some indicators. Yeah, we are looking at a more likely to be downward fall. Let's take out our lagging and leading span. So price try to break out of the Ichimoku cloud. We're looking at it to turn back down. So we are more likely to look at a potential drop. So classics are also looking at a potential drop downwards as well. It depends. All right. So we are also looking at a small upward channel. Okay. So if those that are concerned with this upward channel, you guys can wait till the price to actually exit the sale entry. I mean to exit the upward channel before doing any sale. So we can remove this 50% retracement and change it for a 38.2. And then if price actually breaks out of this upward channel, then we can confirm a better sale towards it. All right. So in this case, if you guys want to, you guys can actually put a closer stop loss to make it lesser than 1:2 part. All right. So this is dollar yen. Do we have any questions or any requests? Okay, so we can look at, okay. Starting from the weekly chart. Previously was a upward moving. All right, still upward moving actually, but looks kind of odd. Looking at something like this. Okay, we can look at a historical price level in March 2020. Looking at this to be a resistance level. However, our more recent resistance level, we are looking at 1.38821. Let's take a look at our daily. We have a clear sign of downward trend. And there was a certain pattern. This is what I have spotted on a upward trend. So let's just say if this is 100% accurate, then we will be looking at a downward fall. So around this area. So yes, indeed, it is a downward moving trend. So let's look at the H4. Can be seen as a channel, but not a very pretty one, I would say. However, we are still looking at a downward fall. Looking at a resistance level of 1.35355 to the most recent highest amount, we are looking at a general downward fall. I will not put my take profit to be 1.29862 because the price is a bit far away. Normally I do analysis that has a greater potential to complete in the same trading day. We are also looking at a forecasted entry that is a bit far away. It's a few bars away. So you guys can take into consideration and analyze it on your own POV. All right. Let's look at where should we place our stop loss. If I were to put it on this right shoulder resistance, it'll be too far away. It'll be 1:1 risk to reward ratio, which I'm not in love with. So I'm looking at a Fibonacci to help me out. So we are looking at a take profit at 78.6% Fibonacci projection. Take profit. This is a sell. And then let's take a look on how can we get our Fibonacci projection for stop loss at 1272. So we are looking at using Fibonacci projection. We're looking at 1272% as a stop loss entry. As a stop loss entry at 1.36131. All right, so this is what we are looking at. It's sort of a forecasted sell entry, is a bit far away, but looking at previous 2-point touches, we are looking at this is to be a probable resistance level that we could be looking at. Then we can also look at a indicator. We're looking at a bearish movement right now for Ichimoku cloud, not very pretty. We can look at RSI. Also looking at a potential reach in resistance, and we are also looking at a downward fall. a very gradual one, but you can see that it's a downward fall. So this is dollar CAD for you guys. Okay, I'll be doing one last pair before I share the platform there. You guys can get in touch with us, and also a special Black Friday promotion. One last pair. Okay, let me think. We can do dollar franc. Let's do dollar franc. Let's do dollar euro. Okay, dollar euro. On the climb for dollar euro, you can see a very standard upward moving trend. Looking at a weekly chart, upward moving, not much of a key levels except for resistance at 1.0303. Let's look at daily. Previously upward moving trend has now dropped down. So we're looking on the decline side of things for dollar euro on the daily, and let's look at 4 hourly. 4 hour mark. Okay, so previously was a pretty steep downward channel. It looks like price has actually gone up a little bit, a fair bit. And then we can see a slight upward moving. If you guys really want to, you can do a very small analysis here. Just right below the support area. Let's use Fibonacci projection, looking at a 78.6%. Yeah, there we go. We have a 78.6 for the buy entry, and looking at 1.272%, which is 127.2. Looking at a stop loss over here. However, this is a very small trade. All right, so for fast and quick movement, actually, for euro dollar, let's look at some indicators. You can see the price is still struggling to actually break through the cloud. Okay, if you guys are fond of Ichimoku cloud, you guys can wait till price actually exceed the cloud to take a movement. All right, whatever analysis right now I'm doing is purely based on the price action and not reliant on the indicators. Okay, so indicators are just supporting for me. So you can take a look at stochastics. Yeah, so we are pending the blue line to actually cross over the orange, so which is our percentage K to cross over our percentage D to have a better confirmation of a buy entry. Okay, that is for euro dollar. So let's move on to the VIP room. All right, so actually IronFX actually had partnership with our company to actually create a VIP room for you guys. Okay, so we are looking at a platform which allows you guys to actually interact with us on a daily basis to catch up on daily news, majors analysis, like we have euro dollar, pound dollar, dollar franc, dollar yen, Aussie dollar, Kiwi dollar, and the XY, which is your dollar index. Okay, so let's take a look at the platform. All right, so every day there will be important news that you guys can actually look at. There are forecasts that you guys can consider to take note in your analysis. So you can see that there are so many news for each currencies, major currencies on daily. So there's euro, pound, USD, of course, yen, we have the Aussie, Kiwi, and we also have commodities, which are our oil, as well as gold, which is a very popular pair as well when you guys are trading. So let's look at some of the majors analysis. So on a daily basis, we will also post analysis that you guys can consider and also discuss. So for example, I would like to discuss with him on this, and or just want to ask on the page. So for example, let's take a look at let's just say I want to put in a Fibonacci for this line. Please for support. So I will say hi. Is this people? So one special function that allows you guys to actually fully interact with us would be to link object to text. Okay, so I selected the Fibonacci extension with 0.786 lines and confirm, and I'll post. So once I posted it, if I hover over, you can see that there's a blinking red color Fibonacci line, as well as on your percentage line. You can see that, we are able to understand what you're saying. So let's just look at some of their highlighted levels. You have the first resistance, the Fibonacci levels, second resistance, etc. So this allows you guys to actually interact and also look at our analysis on a day-to-day basis, which would be beneficial. And it's an open space, especially created by us and IronFX in partnership for you guys to actually have this exclusive website for everyone to interact and also look at the charts together. So we also have commodities. We have gold and silver. We also have your Brent crude oil, WTI, natural gas, and looking at soybean and corn as well. We also have your indices, your S&P, your Nasdaq, your DJI, your DAX, Nikkei. We also have crypto, Bitcoin, and ETH. All right, so we have our crosses as well, our special crosses that you guys want to see. It will be also available on this platform itself. So how do we get in? So normally on the IronFX account, you guys capital has to have a certain level. However, now it's on a 50% off. So what does that mean, right? So let's look at it. So for silver account, initially your initial